All right, as we continue to digest these bank earnings, let's get a sense of how you should play your portfolio when it comes to the financial sector. We've got David Ellison, Hennessy Large Cap Financial Fund Portfolio Manager here. David, just want to get your high-level takeaway from what we're seeing so far as the banks report.
Well, you guys have done a pretty good job of listening to your commentary, pretty good job of sort of laying out the issues. I think so far, I think the bigger banks are telling us that the conditions are okay, not great in the economy, and that's good enough for them. I think they're managing through, a massive change in rates and the yield curve. They're dealing with, changes in credit conditions, and so I think they're managing through pretty well. It doesn't necessarily mean the stocks are going to double or triple, but I think if you look at the big banks, which is the bulk of the lending activity in the economy, they're strong. They're ready to continue to participate in the economy, and I think they'll be fine. I think you're going to hear less sort of enthusiastic numbers as we talk about the smaller banks, because they've been more impacted by obviously what's happened the last month or so, and been more impacted by the rate activity of the last 2 years. So we'll see what happens, but so far, at least we have a few stocks that are up. As you know, it's been a very difficult 2 or 3 weeks here.
David, what happened with these results? I think just because of how chaotic March was for the financial services industry, you have a J.P. Morgan out here smashing estimates, Wells Fargo doing pretty well. In the case of J.P. Morgan, calling out the potential for higher net interest income as the year goes along. What did investors miss? Were the first 2 months of the quarter just that darn good?
Well, I think that, I think the issue is that, rates have moved up, and obviously the big impact in the rise in rates really wasn't felt to the last month of the quarter. But I do think the street is underestimating the bank's ability to raise the yield on assets and offset the rise in the cost of funds. And I think if rates were to stay here, I think you're going to see continued expansion of the margins because those loan yields are going to continue to move up. So I think they were too bearish on margins. Credit's about what it's expected to be. It's not going to be, great. It'll be okay, but it's not going to be like it was the last 2 years. So I think that, the banks actually are going to work and doing their jobs. As I say, that you want to own companies where they're working harder than you are. And I think that's where the banks are now. They're working very hard to manage through the yield curve, the credit, expense issues, fintech, risk, competition, regulatory stuff that's coming down the pike, whatever. So they're working really hard, and so far it appears to be working.
David, perhaps you can help us kind of compare and contrast some of the economic data that we're seeing come through with what bank CEOs are telling us, which is that the consumer spending is remaining healthy. However, you do have credit card sales that are up. You also have card loans that are up. You have retail sales data on the economic side that came in below expectations there. And so with that in mind, I'm not saying somebody's lying, but it's possible for a person to be healthy but still have a cold that they can navigate through, or have severe allergies or some type of sinus infection. I mean, at the end of the day, it's kind of how the banks are classifying this, no? And if so, is it possible that consumers, they might have a cold right now?
Well, I think and that's a great question, and I'm going to answer it, and I'll probably be wrong with my answer. But I think when you were saying it, I was saying, look, the issue is unemployment. Unemployment is very low, and if I lose my job, there's somebody that's going to get a job and take over my car loan or my house loan. So I think that's one of it too. I think because of what's happened, let's say even since 2008. The banks just don't take the risks they used to take. And so you're not going to see, in my opinion, big credit problems at the banks. You're going to see it at private equity and private, debt funds and, non-bank banks, and the shadow banking system is where the credit issues are going to be. The banks just do not take the risks they used to take. And it's showing up in the credit metrics that we're seeing today.
David, real quick before we let you go, is Citi here an undervalued turnaround story?
Well, it's been that way for 10 years. I own a little bit of it. because the day I finish selling it, it's going to double because I'll make the bottom in it. So, I just don't think we know what Citicorp is. And, management's making good money, not doing much of anything. The directors don't hold them accountable. It is a European style bank that really is not doing much of anything, has no identity, doesn't really have any leadership, and they should. And you see that with the other 4 big banks, the other 3 of the 4 big banks that are protected out there. They just need to, get somebody who actually tells the story. And they don't have that now. And until they have that, I think it's dead money.
All right, we'll leave it there. David Ellison, Hennessy Large Cap Financial Fund. Always good to see you. Have a good weekend.